Hi, and thanks for subscribing to my newsletter. Now, you're probably wondering what I think is the real reason stocks go up and the real reason stocks go down. A lot of analysts will say that it's just the earnings, just focus on the earnings. But it's not always just the earnings, it's the earnings growth rate. So let me give you an example. There's a company out there and it continues to have a 20% earnings growth rate. So every quarter they say things are going great, we're growing our earnings by 20% year over year, and the stock continues to do well. But one quarter they say, we're still making more and more money, except our earnings growth rate has slowed down to about 15%. It's probably all over for the stock. The stock could gap down, could continue to go lower until finally the price is in equilibrium with the growth rate, of the earnings of that company. And that could be significantly lower than the stock was at before the announcement. At that time, unfortunately, the fundamental analysts will come in and say, the sell-off is unreasonable, the company's doing well, continues to make more money, but it just won't matter to the stock. And we trade stocks, not just companies. It's the stock of the company, and it's a really big difference. Now, it could actually be the opposite scenario where there's a company losing money, and they lost $1 million last quarter, and the stock is going down, and then the next quarter they come out and say, we only lost $750,000. So they're continuing to lose money, but the losses are actually slowing, and the stock could move up. Then the next quarter they say we only lost $250,000. People are thinking, wow, they're almost making money. Stock could continue to move up again. And of course, if they eventually make money, that's if they think they'll eventually make money. And so that's what I believe really moves stocks. It's the earnings growth rate.